I have a $20,000 Ethereum position that is earning a 65% annualized yield. Let's go and hop into how I'm achieving this through Uniswap v3. So let's go ahead and get straight into business. You can see right here that my APR is a 66.29% APR at the time of recording this video. Now this is on the Ethereum network, and this is a Uniswap v3 concentrated liquidity pool. Today I'm going to be exploring all the different risks behind this liquidity pool and why I'm actually investing into this liquidity pool and how this whole system functions. So I initially deposited 5.52 Ethereum and 9,462 USDC. So I do not have full exposure to Ethereum. That is something that is important to note. I now currently have 5.44 Ethereum and 9,614 USDC. So essentially my USDC exposure increased, whereas my Ethereum exposure decreased. That's because as the price starts to move up, my Ethereum is going to be sold into USDC. And this is because I'm acting as the counterparty to traders on the Uniswap platform. So essentially, if somebody wants to go execute a trade on a decentralized exchange like Uniswap, let's just say they want to buy Ethereum. Well, they're going to go and put USDC in the liquidity pool and take Ethereum out of the liquidity pool. Ultimately, that pushes the price of Ethereum up, which is why when the price of Ethereum goes up, I lose exposure to Ethereum. Whereas when the price of Ethereum goes down, I gain exposure to Ethereum because people are just doing the opposite. They're essentially putting more Ethereum in the liquidity pool and taking USDC out of the liquidity pool. Now, personally, I think this is the best possible pool out there. Yes, it is on Ethereum mainnet. Yes, you will have high gas fees, but when you estimate the potential return on Ethereum mainnet, it comes out to an estimate of roughly 41% APR. So I'm already beating that 41% APR, but at the same exact time, the other networks are coming out to an estimate of 20-25% APR. So yes, I am paying a little bit higher amount in gas cost, but ultimately that is being offset by the earnings that I am getting from this position. So assuming this position did do a 40% annual yield, I'm getting roughly $23 per day. But of course, if it does live up to the 65% yield that it has currently been getting, I'm getting roughly $35 per day, which is a lot more appealing, which is why I'm in this strategy instead of a wrap Bitcoin strategy. Now personally, my range is 1600 to 2000 basically. I do think I will be bringing up my bottom range relatively soon, but when I do bring it up, I'm not going to bring it up a lot just because the market is relatively uncertain right now. Yes, the whole entire crypto market is pumping. This is really good for the crypto market. We are seeing good volume, but at the same exact time, there could be setbacks, there could be bad news, there could be FUD still into play. We need to see how exactly this plays out over the next few weeks, which is why I have some downside exposure, but I also got a good amount of upside exposure. If the price of Ethereum does go to 1850 and it stays above 1850 for maybe a few hours, I will be rearranging my pool to something like probably around 1625 to maybe 2200, which ultimately will bring my 65% APR down to something like 45%, but it will give me a lot more exposure to the upside and it will slow down my impermanent loss. So I currently have $19,334 in this liquidity pool. If I were to just hold my initial 5.5 Ethereum and 9,462 USDC, I would have $19,335. So I would have $1 more. Basically, that's what impermanent loss is. This impermanent loss becomes big when you have huge movements in prices. Like if Ethereum were to skyrocket to $2,000 right now, I would have a lot of impermanent loss. Yes, I would have been generating a yield, but I would have been at a greater profit if I just held my initial assets in my wallet. And that's because remember, our assets are sold in a liquidity pool, whereas if you just hold Ethereum and you hold USDC, your assets are not being sold. Now, once again, I entered this pool roughly 1 day ago. I'm at an overall profit of $15. That means Ethereum went down just a little bit since I invested into this pool, but you do have to factor in gas fees on the Ethereum network. So I had $30 in gas fees getting into this position, which ultimately puts me at a profit of -18. It puts me at an $18 loss because of those gas fees. Rest assured, this position has been going for literally less than a day, and I will be at a profit within a few days. Now I want to dive a little bit deeper into why I selected this pool, the ranges that I'm currently using, as well as different opportunities that you could use within this pool to either get a higher return than I'm currently getting or a lower return than I'm currently getting with less risk. But with that being said, I want to tell you that we have a free Uniswap v3 guide. It is linked down below in the description. All you have to do is enter your name and email, and I'm going to send you over access to it. This will pretty much reveal all of my secrets, so I do recommend you check that out as soon as possible. Now, I'm on the official Uniswap info page. Now, currently, the Ethereum network has a TVL of $2.95 billion and a volume of $870 million in the past 24 hours. If we look at a breakdown by week, you can see in the past 3 days, we have seen $3.1 billion in volume. last week, October 15th through October 22nd, we saw $2.7 billion in volume. So basically the last 3 days have 20% more volume than the previous week that was tracked on this page. And that's just simply due to the fact that we have been seeing an increase in volume over the past few days because Ethereum has been doing well, Bitcoin has been doing well, and all other cryptocurrencies have been doing well for the most part. So looking over at Ethereum token itself, the volume in the past 24 hours has been $733 million. That's because most assets on Uniswap are paired with Ethereum. You have DAI to Ethereum, USDC to Ethereum, USDT to Ethereum. You even have Ethereum to Matic, Ethereum to wrap Bitcoin. Those are the pairs that are traded because Ethereum is the gas token on the Ethereum network, so it is logical to pair Ethereum with other assets when different cryptocurrencies are creating their own crypto. Now, I do want to dive deeper into the $730 million because pairs like Link to Ethereum have $30 million in volume. And let's be real, people are not trading this pair for Ethereum, they're trading it for Link. It just so happens to be that Link is paired with Ethereum. But if you look at USDC to Ethereum, there is volume of $310 million. There's also 16 million on USDC to Ethereum, 12 million on Ethereum to USDT, another 72 million on Ethereum to USDC, and so on and so forth down the list. So we can comfortably say that Ethereum paired with stablecoins makes up for about half of this volume in the past 24 hours. It makes up for roughly $450 million worth of volume, which is exactly why pairing Ethereum with USDC is a really good idea right now, in my personal and professional opinion. Because there's so much volume for Ethereum right now that these yields are absolutely absurd. I want you to take a look at this volume history chart over on our website called Builder Metrics. This is for the Ethereum to USDC pair on 0.05% fee tier. You can see it was a consistent roughly $185 to $225 million in volume per day, all the way up until recently. On October 22nd, we saw $468 million in volume for Ethereum. On October 23rd, we saw $561 million in volume for Ethereum. On October 24th, I believe the numbers were very similar to October 23rd. The thing I want you to notice is the TVL history of this pair is very, very consistent. Obviously, recently, there has been a little bit more TVL, but this is also due to the fact that Ethereum has been increasing in price, which is causing the overall TVL dollar value to go up as well, which means that volume is growing at a much higher pace than TVL is growing, which is allowing for these amazing yield opportunities like we are seeing right now, where I'm getting a 65% APR. And that's with the range of $1,600 to $2,000. Once again, I wanted to allow for some downside exposure. As you can see, if we were to go back over to the $1,500 price points, that's not going to be too good for me. I would go out of range. But chances are, if Ethereum does start to retrace down to something like 1680, I am going to be rearranging my pool to allow for more downside exposure. But the other thing is, if Ethereum goes up to a price point, let's just say around here, maybe 1880, is when I will be rebalancing my pool with a new range. If Ethereum's at 1880, I will probably rebalance my pool to something like this, with the bottom range of 1625, to still allow for that downside exposure, because we just recently saw this pump and we can easily see a retracement, but with upside exposure of roughly $2,200, which yes, is going to lower my return, but at the same time, it allows me to have that upside exposure and not have as much of my Ethereum sold as the price goes up. And once Ethereum becomes super bullish, I am planning on entering into pools that are assets paired with Ethereum. So that could be Link paired with Ethereum, that could be Matic paired with Ethereum, that could be Wrap Bitcoin paired with Ethereum, just so I have full crypto market exposure. Additionally, I probably will have another Ethereum to USDC pair with a lower amount of capital, definitely not $20,000. It'd probably be something like $10,000, and I would just have a super broad range that yields me something like 15 to 20% and is meant for the purpose of selling off Ethereum and taking some profits as the price moves up. And that would look something like this, where I have a range of maybe $1,600 to $3,000. Essentially, that's going to allow me to sell out of Ethereum as the price continuously moves up, which in my opinion is a healthy thing to do, take profits along the way. And once again, I would not be doing that with my full Ethereum bag, because I definitely want to sell Ethereum at much higher prices than we are currently at, but I would be doing that with maybe 5,000, 10,000, or even 7.5K worth of capital. With that being said, there are so many different opportunities out there for Uniswap V3 concentrated liquidity pools. This is just touching the surface level. I recommend you drop a like and subscribe when notifications turned on if you guys do want to learn more about decentralized finance as well as concentrated liquidity pools. That's pretty much all we talk about on this channel. With that being said, I hope you guys did enjoy. If you did, I'll see you guys in the next one. Peace out.